Welcome to the Trade Justice Podcast. We're in the market Skyline today for June 11th, 2018. Big week in the market this week, Noah. We got Donald Trump going over there for a massive and very important summit in Singapore with North Korea and Kim Jong-un III. But the more important thing is what is the market doing? And that's what we're doing here in the Skyline. Last week in the market, Noah, we were looking at the ES contract in the futures market, which is obviously, for those listening, the S&P 500. And we were looking at the potential breakout of 2740, 2750. And our analysis last week was that if it was going to break out, it was going to run up into that 2790 to 2800 area. And it was very simple, Noah. It was just a previous level of resistance, just using historical technical analysis there. And lo and behold, Noah, that is exactly where we're at this week, is 2790. Noah, what is your read on the marketplace here at 2790?
Well, I could pretty much just repeat everything you just said. It was beautiful because it's exactly as you called it. It's almost like this technical analysis stuff works.
Like it works? Like it repeats a little?
Yeah, like the history repeats itself. And it's a pretty clear breakout. I think we are approaching that 2800, 2790 resistance zone. We're range up. It's we talk about swing ranges and the pay range, and where the historical swing, the size of the swing, we're here again. We see that almost 100 points, just a little over 100 points, where that we're slowing down into that resistance zone. I'd expect a small pullback or a hesitation here, but I wouldn't be surprised if it powered through that resistance at some point.
Last week we were talking about how the RSI, Noah, was as the market was breaking out, how RSI was showing strength coming into that breakout, had a lot of room to get into there. RSI, and I know we're not looking at it on a chart, but just let me kind of explain it. RSI is now approaching 70 on that potential breakout. Can the movement going into the breakout, because we're already range up going into the breakout, does that give you a little bit of hesitation on a breakout after it's already ran, versus say last week when we were kind of sitting in a high base type situation where we were looking at a consolidated breakout? Is there a difference in the magnitude of this breakout versus say, or this potential breakout versus say the one we were looking at last week?
Well, it's when you talk about the RSI, one of the things the RSI does do very well is it lets you know when you're range up. It's actually pretty good at identifying after you've had a good run, because it's measuring past cycles to gauge the movement on the future cycles. So it's looking at the past swing ranges, identifying the average price, and it's telling you whether you're on the top side of the typical price or on the bottom side of it. But if it gets up over 70, they'll say that that's overbought or oversold on the downside. But if it's overbought, the funny thing about the RSI and stochastics and similar type indicators is in a trending market, they can stay overbought. They can ride overbought long periods of time, and then eventually they'll correct back down. For me, it's kind of, I always use the analogy of it's like those story problems we used to get when we were kids. Like if you have a car that can travel 300 miles on a single tank of gas and it's already traveled 250 miles, how many miles travel do you have left in the tank, so to speak?
Yeah.
That's kind of how I look at the range and the RSI. It's like if you're in the top part of the range, it's not that it can't keep going. It's just that you're starting to run out of gas. You've had a good swing. People start thinking about taking profits. I would rather take the breakout off of the last setup, off that consolidation, than try to buy in as it's had a good run, a good 10-day run in the market without a correction. I'd rather buy after a correction or consolidation rather than range up into resistance and an RSI over 70.
Well, you look at the potential breakout right here of 20. I'll put that breakout right about 2,800. You're looking at a potential breakout this week of 2,800, and if you look at it just this year in the marketplace, I would say, you know what? I'm a little concerned that it's already ran from 2,700 to 2,800 without some type of retracement. This year in the market, we haven't seen the legs in the past. But if you go look at the chart we're looking at of 2017 coming into 2018, I mean, it ran and ran and ran, and markets can have a tendency to run in a very, very hot market. However, there are some things this week that we are dealing with that we were not dealing with last week. Last week was a very technically driven market. This week, however, Noah, outside of President Trump and meeting with Kim Jong-un over there in Singapore with what could be potentially a very historic meeting, which also creates, some degree of uncertainty. But even outside that historic summit, you're looking at tomorrow, we got the CPI report. Wednesday, we got the PPI report. Wednesday, we got the FOMC policy statement where they're expected to increase the Fed fund rate from 1.75% to 2%. Thursday, you got retail sales. And then Friday, you got some manufacturing and consumer sentiment data. I mean, we have a massive, massive economic week this week as well. When you see when you see a week like this week where you're not only dealing with the technical conditions of the market and the individual company news of the market, but you're also dealing with a historic summit with President Trump, and you're dealing with the FOMC, and you're dealing with all these massive economic reports. How does that impact the way you approach the market?
Well, one, just tighten up your trade management is the first thing I always do. Take care of your current business. Just make sure you've got your current portfolio managed, stops adjusted, adjustments, things of that nature. A week with that much news, I think, creates a lot of potential risk, but as much it also creates opportunity.
Mm-hmm.
So I'm going to be paying close attention to Trump's speech and rhetoric, because he's talking a lot about tariffs, and they're talking a lot about trade, and that's going to affect specific industries and specific groups of stocks. Like if they're talking again about steel tariffs, for example, which we've seen in the past. That's going to affect a lot of those producers, those basic material producers. If they're talking about agricultural policy, that's going to affect agriculture stocks.
Mm-hmm.
So I'm going to be watching very closely for anything policy specific that's going to, cause speculators to jump. And that's where opportunity comes in. Also, just in general, the market, you watch the whole broad market, just keep an eye on the S&P major indexes for any, knee-jerk reactions to any of that stuff, because you got a lot of information coming out, and some of it's is status quo. A lot of those reports will come out exactly as expected. But like an interest rate policy, if we do get a rate hike, are we early enough in the game in the rate hikes that they think that that's a good thing, that the economy is healthy enough to tolerate it, and so it doesn't phase it, or is it
99.9% of the market expects a rate hike?
Right.
It's not gonna shock anybody.
No, but if they don't raise the rates, do you then see like, oh no, people get nervous because they didn't raise the rates? I mean, it's just it all comes down to expectation.
Yeah, you could see it. You could see both sides of that. If they don't raise the rate, you could see the QE dubs come in and be like, oh, buy everything, right? And if they don't, don't raise rate, you might have some people come in and be like, oh, they're really worried about the economy. Let's kind of sell here. It's just it's how people will respond to that. But at the end of the day, this Fed, led by Jerome Powell, has been very straightforward with how they're handling the rate hike discussion. They haven't put any shock into the marketplace. They haven't done anything crazy. They've been very consistent with what they've said versus what they're doing. And like I've said this on the pod before, until Jerome Powell lies to us, I'm going to take the man at his word.
Yep.
And they said they're going to raise the rate. I'm going to say they're going to raise the rate. It's going to be interesting to see how that press conference at 2:30 Mountain Standard Time, 4:30 on the 2:30 Eastern Standard Time on Wednesday, how Jerome Powell handles that news conference, and not to mention the G7. You mentioned trade talks and tariffs and all that. Obviously, we had a little bit of a debacle with the G7 over the weekend up in Canada. I guess is Canada our friend anymore? They're still our friend, right?
Yeah, they're our friends.
They're still a friend. I've said for a long time, if you don't have Canadian friends, you need to go find some Canadian friends. They're the nicest people in the history.
They're not hard to make. You can just walk down the street in any city in Canada.
All you have to do is say hi, and they're your friends. So Canada, we still love you. Trading Justice still loves Canada. I just want to put that out there to the world. And Cam, let the world know that Trading Justice still loves Canada. But moving on, Noah, let's go ahead and look at the next thing in the market Skyline. And usually we go on to the volatility index. So let's go ahead and look at the VIX here. Is there anything you're seeing in the VIX that gives you any rise of concern? Obviously, we're dealing with low volatility right now. Is this impacting the way you're approaching market in any capacity?
No, I mean, we're seeing a little bit lower premiums. The VIX down at 12 the market's not scared. It's not nervous. It's also not completely complacent either. So you've got that, VIX at 12.32, not too bad. I think it's going to be okay premium. Some places you just probably have to shop harder for your premium.
And it's interesting because we just talked about all of the different variables in the market this week. And we just talked about how the volatility of the G7 meetings over the weekend up in Canada, and Trump sitting in Singapore. And if you go look at Twitter, it's the most risky thing, or it's the best thing in the history of mankind. And yet Wall Street is tipping their hand right now. The market's up 10 points, really, really, minimal. The market's up 10 points and they're not buying insurance. The market, Wall Street is not seeing anything of note right now.
No, I mean they seem just kind of complacent. They're not fat, dumb, and happy like it is when the market's extremely overbought. We're not seeing the VIX down below 10. So, but I mean, there's no fear in the market, and rightfully so. I mean, we've had a pretty good strong run, and there's still pretty decent premium out there. So as I go to right options, right credit spreads, covered calls, we're kind of in that lull between earnings, so you don't have super high volatility, but you can still find some decent premium. You just have to shop a little bit.
I mean, and if you're struggling with finding decent premiums on naked puts, covered calls, some credit spreads, the Tackle 25 is a perfect list of 25 stocks that are really good from a cash flow perspective. So when the VIX is low, you go to the Tackle 25. That's what you do to go shop around for some good old-fashioned deals from a volatility perspective. Moving on here, let's go ahead and look at the oil market with the crude oil contract /CL. Crude has had some volatility in the market over the course of the last couple weeks. Obviously, with the announcements coming out of Russia and Saudi Arabia from 2 weeks ago, drove some volatility down. Tried to find a little bit of a support angle last week. I was still concerned with that. It's breaking some fairly important trend lines here, Noah. But has the trend changed in your opinion?
Well, I don't think the primary trend has changed. It's still in that $65 ballpark for support and resistance. After a pretty good sized drop, seasonally, I don't normally have a real strong expectation for oil after about June, July.
Mm-hmm.
So after July, I usually expect things to peter out and usually see some selling anyway. But this year, you got a little bit different posturing going on with inventories, between the Saudis and the Russians and just general consumption patterns. I think that for now, we're still in a trend and still in a primary uptrend. You back that out to a weekly chart and it's a buy setup.
Mm-hmm.
So, take that for
it is sitting right at a buy zone on a weekly chart, no doubt about that. If you're looking at the day chart, I'm a little concerned. I agree with you 100% on the seasonality. Usually we see oil, energy in general kind of stagnate a little bit coming into the summer months. It usually does fairly good, February, March, April, May-ish, and then it kind of goes into a little bit of a droll to a certain extent. But I still like it from a weekly long-term perspective. I think the swing trading, the short-term trading should stay away, though, just given the fact that we're seeing some uncertainty right now. But from a long-term perspective, that $65 level is still a very important support level, 65, 66 in that range, and that's where it's at right now. Moving on, let's go ahead and look at the almighty precious metal of gold /GC. Looking at the gold futures contract, and for those of you who are new to the market, Skyline, from Trading Justice, we like to look at the futures contracts because it shows overnight data, smooths out the gaps that you kind of look at. Gold right now is showing a little bit of slowing momentum from a bearish downtrend perspective. It got back up above 1,300, which is a very important mark for it, but we're still looking at some degree of bearish downtrend here. Noah, what's your analysis?
Just that. I mean, 1,300 is a key number. It's consolidating almost. There's almost a pennant type triangle in there where it's just consolidating right to 1,300. I like gold in general at this price. If it dips, I'm not going to feel bad because you can buy it cheaper. The dollar's been showing a lot of strength, and so this recent drop in gold prices from 1360 down to 1300-ish, not a bad drop for it. But if it breaks, what do you think? 1240 support zone?
1240 to 1260, I'd put it in that range, but it wouldn't surprise me if we see a break of 1280-ish if it gets down to 1240 fairly aggressively, and especially if the dollar shows some strength. Let's move on to the dollar very quickly here, Noah. looking at the dollar on the DXY, you're looking at it, the first retracement that we've really seen that is kind of a textbook retracement. I know we got one on the May 10th through May 11th through May 15th with the upward movement in price it had after that. But this is really kind of that standard slowing momentum textbook, doji candle in between two rising moving averages. The dollar's shown a little bit of weakness in the last week, but overall in the last couple months, it has been very, very, very strong. And if we see that rise in value, that could drive gold down fairly aggressively. Do you see the dollar coming in with all the economic news, the summit, the trade, the tariffs? Do you see this continuing the strength that's shown over the last?
I do. I see it coming back up and challenging that 95 zone. It's, we got probable rate hike, which I think strengthens the dollar. You've got, plenty of other economic indicators that are looking relatively positive. So the dollar's been on a tear, and this is just the first real retracement. This is the first serious, opportunity for buyers to step up. So I see it running up and challenging that 95.50 resistance zone. That's a big zone for it. If you look back at it historically, it's got it's a pivotal price point, you'll say.
Yeah.
So
I'm buying the dollar this week. That I'm a buyer this week, and for everything you just said, for everything I was looking at, I'm a buyer this week, and unless that support level breaks on the dollar index, and that support level right now is really kind of in that 93.40 mark. If that support level breaks, then maybe I change my tune a little bit. But right now, it's showing me some slowing momentum on the retracement in an increasing momentum trend. I like that. I like the dollar against some of the other currency pairs out there this week. I expect it to show some strength coming into this week, but there is a ton of economic news. There is a ton of variables that could impact this trend, no doubt about that. So tighten up your management, as Noah said at the very beginning. And the last thing I want to talk about in the Skyline here is Bitcoin, Noah. I mean, my goodness, what happened over the weekend, Noah? We saw tremendous volatility in the crypto market, and we want to look at the /XBT contract. XBT. Let's look at the XBT contract. Right. Very similar, obviously. But wow, we saw a gap, Noah. A gap.
It went down. To me, it also, I see a big macro descending triangle. That $6,000 zone is a big one. I saw, friends of mine, traders and investors and people, commenting on this downward movement on social media. When the likes of Warren Buffett and those guys are calling it poison, I don't think that bodes well for the near term. I don't think it's beyond manipulation where it's going to be a buy opportunity at some point in time, but market's a little skittish on it. So.
Well, very much so. I mean, you're looking at from the time it got introduced into the futures market. I mean, it initially went up into that $20,000 range, but ever since then, you haven't seen any degree of bullish uptrend in the last 6 months. And you've seen every time the bears have had a chance to control it, the bears have controlled it. You saw a gap in price over the weekend. There was an exchange in South Korea that got hacked. And all of a sudden you see, and it wasn't to the degree of, say, a Mt. Gox in 2013, but these are some of the risks when you trade Bitcoin. And the holders, the true believers out there, they're getting tested right now. They're getting tested, and we'll see if that breaks that 6,000 mark. If Bitcoin breaks 6,000, there is no support level underneath that. There is no support level from a charting perspective in the futures market underneath that level. And that 6,000 level, that 6,000 to 6,500 level, that level is so psychologically important to the Bitcoin traders that if it breaks, they could just run away and say, let's fight another day. So if you're into the crypto market, you got to watch that level. You got to watch that level because these things can go down, and they can go down very, very aggressive. Bitcoin today down $950 on the day, down 12.42% on the day with an increasing volume situation. It's not over. There's no doubt about that. But this level is important.
Well, it is, and the average Bitcoin investor is a novice. They don't know enough about what they're doing to even panic, I think. Um, but the smart money, is playing this both ways. The smart money owns it, and they're shorting the futures.
And they're shorting futures.
So, they're managing and hedging their risk, and it drives prices lower, which just gives, I think, them an opportunity at some point in time to accumulate more. And I think that it'll shake out. A lot of the cryptos will die. I'm not sure which ones are going to survive. I don't think this is acute, but it's certainly something that I see, moving forward, that you're going to see, which of these cryptocurrencies is going to survive and thrive, and and the downward pressure is going to weed out a lot of the weaker offerings. So,
well, the one thing I will say is that on the gap that it had from last night when the futures market opened till right now, you're dealing with about 17, 18, 19 hours of data. And in that 17, 18, 19, 19 hours of data that we've been looking at, Bitcoin really hasn't moved. I mean, it has just kind of been just flatline. It's like it got struck. It's in a coma. Let's see what happens after this. So I'm looking at that level, that very, very important level, that 6,000 level, 6,500 level. That's where I've had support on Bitcoin since really February, and I don't see that changing. I do expect it to hold for a little bit, but man, it's volatile. Be cautious. That's what I'll say. Be cautious if you're crypto traders this week, ladies and gentlemen. That is the Market Skyline presented by Trading Justice. Get in the game. We'll be right back with more from Trading Justice and our special guest host, Noah Davidson.